let's get you some more fundamental view as to how you should deal with entire volatility in the market. We did speak with Sandeep Tandon earlier. Listen into his market views.
Metal emerge as a new leaders. Okay, and is this thesis has started a year back? I think it has more legs. And if you ask me, last year also I said that 2024 belongs to metal and mining companies globally, not only India. That's the reason we like even countries like Australia should do very well. Okay, some of the Canadian companies should do very well. Brazil should do very well, or South Africa should do very well. So anything, because we are talking about how market is moving from the relevance of the leverage economy concept is moving towards real economy. And one of the thesis we launched our commodities fund, despite a lot of people consider commodity as a and the people don't like as a commodity company, but we think something has changed, some structure changes are visible for us. So I think commodities is a new leadership role. Irrespective of China, now China looks suddenly good from a very near-term perspective or short-term perspective, but irrespective of China and irrespective of what happened to the dollar move, okay, overall metal mining is a new leadership, not only from India, I'm looking from a global perspective. So pharma is new leadership which has begun in that space. So entire healthcare space looks very good to me. Yes, I agree. PSU is the new leader, which again we have seen, hardly anything has happened. We're talking about 1.5 decades of underperformance in this sector, and they're emerging in a big way, grossly under own space. So we look for these opportunities. So clearly, metals, PSU, pharma is a very big theme. Okay, maybe FMCG is also early signs of bottoming out. As each and every stock has not bottomed out, but some characteristics are there where we will look for a buying opportunity at bottom levels. It's not. I'm not in a hurry that we have to buy today only, but they have showing early signs of bottoming out. That's a characteristic which we wait for.
Your large holding is actually Jio and Reliance and a combination of both. Do you think that typical exposure of yours has reached its climax, or it's a long way to go?
To be, so I think that both for Geo, I think I will not say Geo because a lot of people are very uncomfortable with business. I think if you really look at what we bought Reliance actually. When Geo got listed, so Reliance I was getting a discount. Excuse me. So we built a very large exposure. We will remain very gungo as a Reliance industry, as a company, as a public disclosure. All our schemes, Reliance and Geo are the topmost holding, and then third is Adani Power, the top three names in our portfolio. Most of the scheme you will find them, and then Britannia we added. So these are the 4-5 names which is there in our holding list. We remain convinced, okay, that meaningful upside is there. Reliance as a group in a big way. The value unlocking is so bound to happen. It was a question of time that the merger will happen, because if they have given commitment to 5 years for private equity, so that's the phenomenon which will play out. But our thesis is not banking on that. If you really look at the intrinsic value of telecom, intrinsic value of retail, market is willing to give absurd valuation to some energy companies or the green energy company. Market is willing to absurd valuation to select technology or AI company. But in totality, Reliance has very sizable bet and they are building big in this space. Market is not willing to accept. So it's not about contrarian call, it's a data-driven call. We remain very constructive on our larger call. And if you look at, we do take concentrated bet, but this concentration bets is based on conviction, and conviction is based on data. We demonstrated some time back in ITC in big time. ITC was topmost holding when people have ignored in the market. Do not we built a very large exposure. It was like 8, 9, 10% of our portfolio. It played out very well in our thesis. Okay, we took that advantage. We were very early to spot PSU banks in our portfolio. Now we have pruned down banks, but we have other PSU because we have built exposure somewhere else. So our exposure in PSU remain, but we have moved out from PSU banks to other things. So I think the way we look at is a data-driven approach. So data points are not showcasing. Still early stages. We think both the names have potential to go up from a long-term perspective. That's the reason it remains a core holding for us.
But why with PSUs, even though the run-up has been strong, 4-5x from the COVID lows, maybe 10 times in defense and railways, you still feel that it is in the leadership group? I mean, it's a consensus trade, everybody owns it. More than institutional investors, it's like PSUs now har retail ke ghar ki kahani.
So, Nikuj, I will take this thing to a slide. Let me give you how we look at market. We work on a concept of perception analytics. Okay. Now, in terms of perception analytics, what we are trying to quantify, like analysts quantify the earnings for next 3 years, 5-year perspective. With the help of perception analytics, we quantify whether that particular stock sector has the potential to re-rate or de-rate. That's the entire thesis. So we instead of looking at earning forecasts are important, but valuation forecast is also important. If your valuation expand, the multiple expand, and the earnings expand, then it's a deadly combination. So I think industry is very good in doing the work on the earnings side. We specialize in looking at the perception analytic data, how the multiple can has potential to expand. That background, I think for the entire PSU, okay, if you really look at, still we have seen the first leg of that, where perception has expanded. Yes, retail has participated because they are fairly liquid names. So see, if you really look at in today's context, when we say easy phase of balloon, what I'm looking at, we are looking at a relatively attractive valuation. Okay, and even if I had to go by the SEBI stress formula or the liquidity thing, what it encourages that you should have to have low P multiple stocks, and if you have liquid names in a portfolio, your report cards will look better. Okay, and much before this circular, right from January, we are doing that. We are moving towards liquid names. We are moving towards low valuation thing. So if I have to talk about the that only the first leg of earnings re-rating has only happened, the further re-rating, it's like sometimes you say the earnings gets expanded and then P multiple get expanded. Sometimes reverse is also in the new age company, the multiple got expanded first, not the price, but price to sales got expanded and then followed by earnings. So I think so one has to look at, this is something which we identify through perception analytics, whether earning multiple will happen first or the rating will have changed first. So we are seeing that the first kind of re-rating is happening on terms of valuation aspect. The valuation multiple are expanding first, earnings will follow, and then further round will happen. The first round is over, and second round also you see that. So I'm not saying that is not going to correct at all. Okay, we and healthy corrections are very good. As an institution, we are very happy that some of the stocks have corrected 15-20%. So it's a great buying opportunity. We bought yesterday also. So if it correct further, we will looking for buying opportunity. Then we are very remain very constructive on this space. We call it a decadal opportunity. A decadal opportunity for PSU, decadal opportunity for manufacturing, a decadal opportunity for the metals and mining. So it's a larger thesis which I am talking about, not just for 1 month or 1 quarter perspective or 1 year perspective.